Well, Bharti Airtel has come out with its earnings today. So let's take you through the numbers. PAT has come in at 1,554 crore rupees. We are expecting PAT to come in at around 1,327 crore rupees there on your screen. So it is better than expectation. In fact, this time we are expecting PAT to get significantly hit because of an increase in service tax. There's been MTR cuts which have hit their other peers, the other players in the market like Vodafone and Idea. So this PAT figure seems to be significantly better than what we are expecting. We'll get you all the net sales figures, etc. in just a short while. On the bottom line, it looks much better than expected. Remember, this particular time, Idea, for instance, their total income has come in at 23,671. This is in line with what we were expecting. We were expecting the total income to come in at around 23,307. So just marginally beats expectations on the top line front, but PAT looks good. Couple of other figures that we need to watch out for. Volumes is very important. The ARPU in this particular quarter is very important. In fact, Varinder has been going through all those numbers in details. Let's go across to him. Varinder, okay, so for now I just have PAT and sales. So PAT seems to be slightly better than what we are expecting, and overall sales seem to be just meeting estimates. Can we say that right now? And also, do you have the other figures on you yet?
I'm looking for the EBITDA number, which is very important. And I think EBITDA, if I'm not wrong, it has come at 8262.
Okay, so that is marginally, that's actually in line with the expectations.
It's 8262 crore consolidated EBITDA,
okay,
which is in line. So if you calculate the margins, margins have come around 35%, which is totally in line
just
with what we were
expecting. We were expecting 35.2% at that.
One word I think on the sales figure, if I'm not wrong, it's 23671 crores,
okay,
which means that they are better than what Street was expecting. Street was expecting a growth of 1.3%, but it has come at a growth of nearly 2.7%, so which is a good thing. Profit, of course, as you rightly mentioned, that it is a huge beat, but we have to watch out for because there are a lot of extraordinaries which come with Bharti numbers. So on the face of it, if you look at the consolidated numbers, sales better than what Street was expecting, nearly 1.5% beat there. EBITDA totally in line. EBITDA margin at 35%, which is again totally in line. PAT, a beat of nearly 200 crores. Have to see, whether there is some extraordinaries, which has come out there.
Okay, Varinder, I'll let you go through all the other details. We'll need details as far as the India and Africa breakup is concerned. But let's go across to Mayuresh. We'll get you analysts in just a bit, but remember there will be a breakup as far as the India and Africa revenues are concerned. And as Varinder was saying, while the top line is looking good, we are actually expecting India numbers to be significantly better than Africa figures. India this particular quarter was expected to perform.
Well, and India EBITDA is very good. Okay, India EBITDA margin has came at 40.4%. Okay, which is a good thing. I think people on the street were expecting 39.1%. So EBITDA margins for India at 40.4%. Is something good which has come out, in Bharti Airtel numbers.
Do you have the figures as far as the top line is concerned? Because, India, remember, was expected to see many cuts like there was this.
See, India revenue, they're saying it's up 12.7% year on year on underlying basis.
Okay.
So if it's 12.7% growth, it's really good, but I have to look at for the absolute number what they're talking about. But as I said, EBITDA margins at 40.4% is a 50 basis point beat on the EBITDA margins number. Okay. I'll watch out for the total absolute number for this case.
Okay, Mayuresh, let me come to you quickly. We are getting into all the details as far as the India sales figure is concerned, but on the basic top line and bottom line figures, is this a meet or is this a marginal beat as far as your expectations are concerned?
I think on the bottom line, clearly, I think it's a beat, but one really needs to understand because Bharati's numbers contain not many items considered, but top line more in line with estimates. Again, I think the EBITDA margins has been a beat in my opinion. So I think would wait how the data revenues have panned out, how the mobile traffic growth has been, and I would specifically look out for how the African margins have come through, because the expectations were for the African business to come between 19.5% to 20%, and African EBITDA to come close to that $200 billion.
Okay, some more figures coming in, Mayuresh. They've received $1.34 billion from the sale of towers, which has been taken into this particular quarter. As far as the churn is concerned, India churn has been at 3.3% and Africa churn is slightly larger at that. Do you have details as to how much has come in as far as the overall the tower business capital flowing into this particular quarter is concerned?
Well, I think the number which I read was around $1.3 billion, which is just flashing on our screen. If that is true, that is a good number which has come out, in terms of the numbers coming in from there. Also, I can read, from India business, you were asking for the year-on-year growth numbers. For total revenues, it has come at 17369. Okay. 17369 means a growth. It's really good, in terms of numbers which has come, a 10% growth which I can see on total revenues front for India business. Even EBITDA has seen a growth of 16%, and it has come at 7021. So India business has done really good this time, which is just exceptional, as I said, EBITDA margins at 40.4% is something market will look, healthy in terms of what numbers have been reported for the India business specifically.
Okay. So all in all, significantly better than expectation. Let me get another guest over here. Naveen Kulkarni, Varinder is going into all the other details. So you heard the India figures. We'll get you the Africa figures in just a bit. But all in all, it looks like a significant beat as far as the India numbers are concerned. Bottom line also better than expectations. In a quarter where we were expecting MTR cuts, roaming cap hit and service tax to actually hit the company.
Yeah, the India numbers definitely look good, especially the mobile revenues. We were not expecting this kind of growth on the mobile revenue. So that number looks quite encouraging, and India EBITDA looks pretty strong.
What about the ARPU and the MOUs for which have come in for India and Africa?
India average revenue per user is largely, I guess, it's more or less flattish. But I can see the voice traffic has grown significantly.
Okay, I'll get back to Manoj and Naveen in just a bit. Varinder, do you have more of the breakup as far as the Africa revenues is concerned and the basic metrics of India as well in terms of the indicators?
So as I said, Africa revenue grew 1%. That is what we are taking away from there. So if a 1% growth coming on Africa, I think analysts will take with both the hands, because people were considering that on constant currency terms, there could be a degrowth because of the depreciation what some of the African currencies have seen. And no one was expecting a major headway coming from Africa, but looking only on the India business, I think, and the margins coming in from there, which I said at 40.4%, and which Naveen also alluded, I think these are good set of numbers coming in from Bharti, and the stock should be positive tomorrow. Importantly, the PAT is clearly a beat, on what people were expecting. EBITDA margins at that 35%, which everyone was expecting. Net sales a beat of nearly 1.5% again is a good sign.
Yeah, I'll quickly get in. All right, we're completely out of time. So all in all, good set of numbers as Varinder gave a breakup. Bottom line much better than expected. Most KPIs have come in strong. India revenue is significant. Africa, since it's smaller than India, doesn't matter as much. The fact that India has beaten street estimates is a huge positive. We'll get you a detailed, consolidated analysis later through the day. But with that, completely out of time on Reporter's Diary. Thank you so much for watching this show. Stay tuned though to CNBC TV 18.